What are you overweight right now?
Well, from a portfolio basis, we still like some of the longer-term growth sectors in China, like some domestic consumption, some high-tech or high-advanced manufacturing sectors, as well as some net zero or environmental protection-related sectors. But at the same time, we also have some overweight in more defensive sectors, just to balance out the higher beta, the higher risk growth sectors. So defensive sectors such as financials, some of the industrial names, or even some maybe some consumer staples that are able to pass through the cost increase. We do have some of these to balance out the growth sectors as of now. So overall, the portfolio stance, I would say, we have. I would say it is somewhat on a balanced kind of defensive kind of stance for the time being.
Understood. And I'm not sure if you saw, Bank of America yesterday released the April Fund Manager Survey, and just to highlight some of the risks there, a global recession, inflation, and tightening policy mistake. In your view, what is the biggest risk in your view at this point in time?
Well, I think the Fed interest rate policy, the tightening policy, as well as whether there is a potential any policy mistake. That's I think that's a very big risk. And secondly, coming to our markets is right now is the Omicron outbreak in China. Whether that's going to present a longer lasting slowness in the economy is another major risk for us. Geopolitical risks also, whether the Russia-Ukraine situation, what's the impact and how long it's going to last is still quite an uncertainty to the market. So that's another big risk as well.
And how then are you talked a little bit about this, how are you approaching that risk though, that possibly we could get a derating in terms of earnings or the market itself in China because of the outbreak there?
Yeah, so we just have to stay defensive for the time being. So as I said, while we hold on some of the growth sectors, we do have some defensive names to balance out the exposure, so that hopefully that will reduce the volatility in the portfolio. So that's how we balance it. But I think we just need to examine very closely. Right now it's kind of difficult, but we want to see whether some of these impacts are more on a short-term basis or whether they have a long-lasting basis. For example, the high inflation, we just heard the last night, the inflation in the U.S. is 8.5%, so it's very high. But and that triggers the interest rate policies, and people worry about recession because of the U.S. raising rates a lot. But the thing is, just look at the inflation. What is the cause of the inflation? All along, the cause of the inflation has been a disruption in the supply chain because of COVID. And now with the COVID situation alleviating in a lot of the major economies and the supply chain starting to resume back to normal, would that continue to have an impact on, would the supply chain continue to be as disrupted as of now? That's something that we have to watch. Because the Fed can adjust the policies if the inflation somewhat tones down. And secondly, the Russia-Ukraine situation is causing a very high energy prices, and that's also adding fuel to the high inflation. And it seems like there's been some talks going on this between the two sides. So how it's going to pan out, whether there's any potentially, given that so many things happen, whether there's any potentially slightly positive developments over there, could potentially also help alleviate the pressures given by the high energy prices. So some of the impacts could potentially be relatively shorter terms and could be resolved in a few months. And the Omicron outbreak in China, again, it's just becoming quite serious in the past 1 month. So, but China in the past has been able to curb the spread quite effectively. So whether this time they're able to do it, and how much of the economy has to have suffered from a lockdown, that remains to be monitored.
Right. And one of your calls, though, and I was wondering if you could flesh the idea out a little bit for our viewers, is domestic consumption, because that doesn't seem to be a place where you want to be if there's an outbreak and we don't know what's going to happen as far as the situation there is concerned.
Well, honestly, I think consumption will also be suppressed if there is a massive lockdown across the major cities or a big part of China. So that might also dampen that would likely potentially dampen the consumption. So we do have some consumer names or consumption theme is a long-term thematic in the portfolio. But I would like to point out that instead of
Understood.
other than the consumption pie, the whole pie going bigger. Potentially, we also try to identify those sectors where the domestic brands are replacing international brands. We are seeing some of that happening in selective sectors where the domestic brands are gaining market share from the international brands. So you don't necessarily need that very fast growth on the overall consumption pie, but there's also some underlying dynamics that investors could potentially benefit from.